Good afternoon, everybody. This is Pam Selberg. I'm a senior area manager with the Small Business Administration. I'm located here in Rapid City, currently working from my home, as is everybody, I believe. Thanks for joining me today. A huge shout out to Elevate Rapid City for hosting this for us. It's very important for us to get this information out as quickly as we can. I will be taking questions and answers at the end of the presentation. Let's do it that way. And please use the Q&A box versus the chat. That way, if I cannot answer your question on the webinar, I'll be able to get back to everybody with the answers. Wow, what a week it's been. What a couple weeks it's been. I was on previously, rolled out the Economic Injury Disaster Loan Program, and we have had 2 additional components now available since then. And things are rapidly changing. We want to try to get you that information as correctly as we can. So some of the information is still not available. If you see me looking down, I also have my work computer that I have with me in hopes that updated information will come in as I'm on the webinar with you. Again, I am with the Small Business Administration. We are the lead agency in providing disaster assistance for small businesses. So what is new to the field? The CARES Act was established. It was a $34 billion paycheck protection program. You might hear me refer to it as P3. It's easier to go through and say P3 than the Paycheck Protection Program. The program will provide much needed relief to millions of small businesses so they can sustain their business and keep their workers employed. HR 748, this legislation provides small businesses job retention loans to provide 8 weeks of payroll and certain overhead to keep workers employed. Treasury and the Small Business Administration expect to have this program up and running by tomorrow so that businesses can go to our participating SBA 7A lender, bank, or credit union, apply for a loan, and be approved the same day. The loans will be forgiven as long as the funds are used to keep employees on the payroll and for certain other expenses. So what is the P3 program? The new loan program will be available retroactive from February 15th of 2020, so employers can rehire any recently laid off employees through June 30th of 2020. The P3 program provides small businesses with funds to pay up to 8 weeks of payroll, including benefits. Funds can also be used to pay interest on mortgages, rents, and utilities. Who are the eligible businesses? All businesses, including nonprofits, veterans organizations, tribal concerns, sole proprietorships, self-employed individuals, and independent contractors with 500 or fewer employees, or no greater than the number of employees set by the SBA as a size standard for certain industries. Maximum loan amount is up to $10 million. Loan forgiveness if the proceeds used for payroll cost and other designated business operating expenses in the 8 weeks following the date of the loan origination. Due to likely high subscription, it's anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. All loans under this program will have the following identical feature. We've already had a change this afternoon about 3 minutes ago. The interest rate of this loan has been increased to 1%. The maturity is 2 years. The first payment deferral for 6 months. So whoever applies for this will not make a payment for 6 months. It's 100% guaranteed by the SBA. No collateral, no personal guarantees, and no borrower or lender fees payable to SBA. Payroll costs are capped at $100,000 on an annualized basis for each employee. It's anticipated that, again, that not more than 25% of the forgiven amount may be for non-payroll costs, and loan payments will be deferred for 6 months. Starting tomorrow, small businesses and sole proprietors can apply. Again, I'm waiting for clearance from headquarters that we are ready to go live tomorrow. As of now, we have not received that information, but hang tight. Things are moving very fast and furious. Starting April 10th, independent contractors and self-employed individuals can apply, and we encourage you to apply as quickly as you can. How to apply? Borrowers apply through any existing SBA lender or through any federally insured depository institution, federally insured credit union, and Farm Credit System institution that is participating. Other regulated lenders will be available to make these loans once they are approved and enrolled in the program. Fully forgiven funds, provided in the form of loans that will be fully forgiven when used for payroll cost, interest on mortgages, rent, and utilities. At least 75% of the forgiven amount must have been used for payroll. Loan payments will also be deferred for 6 months, no collateral or personal guarantees, and neither the government nor lenders will charge small businesses any fees. So what is the principle? The principle is that the employees on the payroll must be rehired quickly. Forgiveness is based on the employer maintaining or quickly rehiring employees and maintaining salary levels. Forgiveness will be reduced if full-time headcount declines or if salary and wages decrease. Small businesses with 500 or fewer employees, including nonprofits, veterans organizations, tribal concerns, self-employed individuals, sole proprietorships, and independent contractors are eligible. Businesses with more than 500 employees are eligible in certain industries with NAICS codes of 72, and that will be your hotel, motel industry. Businesses in the accommodation and food service sector is NAICS 72. Employees, sorry, I can't read that word over there. An employee rule is applied on per physical location basis. The provision applicable to affiliations are waived for any business with not more than 500 employees. SBA does, in our previous loan programs, we have an affiliation rule, but that is being waived for anybody that has a NAICS code of 72. Business concerns. During the covered period, any business concern that employs not more than 500 employees per physical location of the business concern and that is assigned a NAICS code beginning with 72 at the time of dispersal shall be eligible to receive a covered loan. All applicants with greater than 20% ownership stake will certify, and then this is taken directly off of the application for the P3 loan. So every owner with greater than 20% ownership will have to complete this form. The first section requests information about the business. This is on the application. Questions 5 and 7 are to be completed, signed, and dated by each applicant who is an individual, as well as each 20% or greater owner. All parties listed considered owners of the applicable business are defined as principals. For a sole proprietorship, it's the sole proprietor. For a partnership, all general partners and all limited partners owning 20% or more of the equity of the firm. For a corporation, all owners of 20% or more of the corporation. For a limited liability, all members owning 20% or more of the company. Any trustor if the applicant is owned by a trust. Small business concerns that will be covered include supply chains, quantity and lead time, decreased numbers of shipments or components and delay in shipments, decrease in quality, included shortage of supplies for quality control and technology, staffing challenges, a decrease in gross receipts or customers, or a closure. Again, I'm just going to go over that. These issues will be eligible. Quantity and lead time, decreased number of shipments of components and delays in shipments, decreased quality, including shortages in supply for quality control reasons, staffing challenges, and a decrease in gross receipts or customers, or a closure. Starting April 3rd, small businesses and sole proprietorships can apply. April 10th is the rollout for independent contractors and self-employed. Businesses are encouraged to apply as quickly as possible. How to apply? Basically, you're going to go through to an existing SBA 7A lender or through any federally insured depository institution, federally insured credit union, and farm credit system institution that is participating. Other regulated lenders will have the opportunity to originate these loans once they apply, and all loans will have the same terms regardless of lender or borrower. Processing fees. So this is what the lender will get. Again, this is not passed on to the applicant. These fees are paid by SBA. So any loans $350,000 and under would be a 5% fee to the lender. $350,000 to $2 million is a 3% fee to the lender, and loans greater than $2 million is a 1% fee. Lenders may not collect any fees from the applicant. I know that there's a lot of scamming going on right now, so please beware of that. If you are an applicant, that you are not paying any fees and that you're going to your local lender to apply for these loans. The loans are guaranteed by the SBA, and the SBA will waive all guarantee fees for the lender, including the upfront and annual servicing fee. So some of this information is for lenders, some of it is for the applicants. I just want to let you know that some businesses I've gotten contacted by, they have their accountant working on things, some have their attorneys, a consultant. Those are actually considered agents. If those individuals or agents are actually charging a fee for their services, that fee cannot be paid by the borrower. That fee has to be paid by the lender. Agent fees will be paid out of lender fees. This is how the agents will be compensated. And can these loans be sold in the secondary market? Yes, the P3 loans can be sold in the secondary market. Underwriting. This is what you're going to need. Lenders will need to verify, one, that a borrower was in operation on February 15th, 2020. Lenders will need to verify that a borrower had employees for whom the borrower paid salaries and payroll taxes, and the lenders will need to verify the dollar amount of average monthly payroll cost. So you will need to follow the applicable Bank Secrecy Act requirements. Those are the only 3 items that are going to be required for underwriting. The underwriting requirement that a small business concern is unable to obtain credit elsewhere does not apply. That is a rule currently in place for other 7A loans, but not in the P3 loans. No personal guarantee should be required and no collateral shall be required. No later than 15 days after the date on which the loan is made, the administrator shall register the loan using the tax identification number assigned to the borrower. So how do we calculate what my payroll is going to be? You take your average previous year monthly payroll cost times 2.5. Seasonal employers, and I know we have a lot of those because we're in a tourist industry, you take the average total monthly payment for payroll for the 12-week period beginning February 15th or at the election of the eligible recipient, March 1, 2019, and ending June 30th, 2019. The outstanding amount of the loan made during the covered period beginning on January 30th, 2020, and ending on the date which covered loans are made available to be refinanced, not to exceed $10 million. So the P3 loan is $10 million. I'll go over the other 2 loan components once we get to the end of the P3. Again, here is how you calculate your monthly payroll. You can go on sba.gov/disaster, and a sample of the P3 application will be on that website for everybody to take a look at. Again, for purposes of calculating your average monthly payroll, most applicants will use the average monthly payroll for 2019, excluding costs over $100,000 on an annualized basis for each employee. So if you have employees that make more than $100,000, you have to not count that income in your monthly payroll. For seasonal businesses, the applicant may elect to instead use an average monthly payroll from the time period between February 15th, 2019 and June 30th, 2019. For new businesses, average monthly payroll may be calculated using the time period from January 1, 2020 to February 29th, 2020, excluding cost of any employee that makes more than $100,000. So what are allowable uses of the P3 loan? Payroll cost, and the payroll cost will include continuation of group care benefits during a period of paid sick, medical, or family leave insurance premiums, employee salaries, commission, or similar compensations, interest on any mortgage obligation, and interest on any other debt obligation incurred before the covered period, rents and utilities. Notice it's not principal, it's just the interest on the mortgage and interest on other debt obligation. The authority to make these loans shall be extended. Lenders, okay, I'm sorry. The authority to make loans shall be extended. Lenders to determine have the necessary qualifications to process, close, disperse the loans made with the guarantee of the administration. The borrower wasn't, what you need to prove is that the borrower was in operation on February 15th, 2020, had employees for whom the borrower paid salaries, and paid independent contractors as reported on a Form 1099. So independent contractors are included in the payroll calculation. Requirement documentation. An eligible recipient applying for a covered loan shall make a good faith certification that the uncertainty of the current economic conditions make it necessary that the loan request to support the ongoing operation of the eligible recipient, that funds will be used to retain workers and maintain payroll, and during the period beginning February 15, 2020 and ending on December 31st, 2020, the eligible recipient has not received amounts under the subsection for the same purpose. And what that means is that we have two other programs out there right now. We have the Economic Injury Disaster Loan, and we have the Economic Injury Disaster Loan Advance. Both of those you apply directly through sba.gov/disaster. So let's say that we had a business and that business wanted to apply for payroll. There's a $10,000 forgivable grant on the Economic Injury Disaster Loan Advance through SBA. If you applied for that and you got your $10,000 grant to cover payroll, now you went into the local lender and you applied for the P3 loan and received money for payroll, you would have to reduce that amount by the $10,000 grant that you received. A person cannot receive duplication of benefits. So the business and every 20% or greater owner must certify in good faith to all of the below by initially next to each one. That certifications, again, there's an example of that in sba.gov/disaster. And what they're certifying are those items. I'm going to go back there. Notice the first one, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. We have a tremendous amount of businesses that have been affected by COVID-19, but there are some businesses that have not been affected. Some businesses are doing gangbusters because of the type of industry that they're in. For that type of business, they could not, I believe they would not be able to initial that first statement that this loan request is necessary to support the ongoing operation of the applicant. So make sure when you're applying that truly you have been affected by COVID-19. So what is the P3 in a nutshell? The loan amount is a maximum of 10 million. SBA loan guaranteed of 100%. This has changed. The last two items have changed since these slides were made. That's how fast this information is getting out there. The loan term is now 2 years and the interest rate is 1%. So please ignore those other two. It's a 2-year term with a 1% interest rate. We also have lenders that can do express loans. The express loans are a fast way for businesses, if they need money immediately, to go into their local lender and apply for an express loan. The regular express loan has been increased up to up to $1 million. We also have a disaster express loan, and that amount is $25,000. Again, both of those would be done by your local lender. I'm just trying to see eligible entities. Let's go over this again. Businesses with not more than 500 employees, individuals operating as a sole proprietorship with or without employees, independent contractors, cooperatives with not more than 500 employees, ESOPs with not more than 500 employees, tribal small business concerns with not more than 500 employees. Waived. Any rules related to the personal guarantee has been waived. Waive the requirement that applicants need to be in business for a 1-year period before the disaster. Waived the requirements that an applicant be unable to obtain credit elsewhere. The reason why we're putting those in there is that some lenders are used to doing normal 7A loans, and in a normal 7A loans, these are requirements that they would normally have to abide by, but all these 3 items here have been waived for the disaster. Lenders may approve an applicant based solely on the credit score of the applicant and shall not require an applicant to submit a tax return or a tax return transcript for such approval. Lenders may use alternative appropriate methods to determine an applicant's ability to repay. That will be a discussion with the applicant and the lender. Loan deferments. Lenders shall provide complete payment deferment relief for impacted borrowers with covered loans for a period of not less than 6 months. So all of these loans will have a 6-month deferment. For those businesses that take out just a regular SBA loan, the same thing will apply. You will have a 6-month deferment on a non-disaster SBA loan as well. During the covered period, with respect to a covered loan that is sold on the secondary market, if an investor declines to approve a deferral request by a lender, the administrator shall exercise the authority to purchase the loan so that the borrower is not impacted. A covered loan shall be eligible to be sold on the secondary market. That is a good thing for lenders. It's another way for them to get fee income from these loans. And a covered loan shall receive a risk weight of 0%. So some of this, again, I know I have a mixed audience out here, some applicants, some lenders, but I also want to let you know that, it's important that as we get this information out, that we get it out to all of the community. Let me see. That's all right. We've already gone over that. Hold on, I'm going to try to get through this because I know that there's some questions. There shall be no prepayment penalty for any payment made on a covered loan. Again, that's the commitment period beginning February 15th and ending June 30th. And then the loan forgiveness. Lenders may forgive for a period of 8 weeks beginning on the date of the origination of the loan, which is originated under the Paycheck Protection Act. The remaining balance will continue to be guaranteed and shall have a maximum maturity. It's now 2 years from the date of which the borrower applies for loan forgiveness. The remaining balance shall continue to be guaranteed by the administration. Loan forgiveness for the 8-week period, beginning on the date again of origination. The debt instrument incurred in the ordinary course of business that is a liability of the borrower is a mortgage on a real or personal property and was incurred before February 15th, 2020. So that's how you would prove if you had a mortgage, or it will cover rent and utility payments, including electricity, gas, water, transportation, telephone, or internet access, for which services began before February 15th. So I just had that question from a lender today, what's included in utility payments? It's and applicants, please know it's electricity, gas, water, transportation, telephone, or internet access. No later than 90 days after the date on which the amount of the forgiveness under this section is determined, the administrator shall remit to the lender an amount equal to the amount of forgiveness. So this is just a check for the lenders to know when will they receive their money for these loans. And then, so how much can be forgiven? The amount may not exceed the original principal amount. The reduction based on reduction in number of employees, reduction relating to salary and wages, and exemption for rehires. The covered period means the 8-week period beginning on the date of the origination of a covered loan. So again, what is the purpose of this P3 loan? It's to make sure that employers retain or rehire their employees. There's a question out there as if, what if I have all part-time employees? So this should go ahead and cover that. Your number of full-time equivalent employees on payroll and payroll rates for the period described, including your payroll tax filings, state income payroll and unemployment insurance filings, documentation, including maybe canceled checks, payment receipts, transcripts of accounts, and a certification that the documentation presented is true and correct. So basically what you as an applicant need to provide to your lender is proof of what is all in your payroll, how many are included in your payroll, so that the lender can go ahead and figure out what actual amount you can borrow for your payroll costs. No eligible recipient shall receive forgiveness under this section without submitting to the lender that is servicing the covered loan the documentation that is required. So I've had a lot of questions today from applicants. What do I need to bring into my lender? My suggestion is that you go back to your accountant and you get verification of your payroll records, or if you keep those payroll records yourself, make sure that you have the required, how many employees, what their salary was, what their salaries were, what their annual wages were, hourly wages, that type of information that you can provide your lender. So for the purpose of IRS code of the 1986, any amount which would be included in gross income of the eligible recipient by reason of forgiveness described shall be excluded from gross income. So that's kind of a mouthful right there, but any amount which would be includable in gross income of the eligible recipient by reason of forgiveness described shall be excluded from gross income. There's a lot of questions out there on seasonal workers, on waitresses, how do we do, how do we calculate their tips? And I can tell you that in our normal 7A program, those are not a those are typically an ineligible item, but for the disaster program, waitresses and their tips, that is an eligible payroll deduction. The cancellation of indebtedness on a P3 loan shall not otherwise modify the terms and condition of that loan. And then emergency grants. So small businesses, private nonprofits, and small agriculture co-ops that apply for a P3 loan request on advance that is in the amount requested by such an applicant within 3 days. So how do you get that? That is that economic injury disaster loan advance program I was talking about. You apply through that with SBA.gov, and I'm still waiting to hear from those that applied on Tuesday, but if this holds true, they should be getting their money tomorrow. An advance not to exceed $10,000 may be used to address any allocated purposes for providing paid sick leave to employees unable to work during the affected COVID-19, maintaining payroll, meeting increased costs, making rent or mortgage payment, and repaying obligations that cannot be met due to revenue losses. That is all the eligible items for the other $10,000 grant. Again, and that one is through sba.gov/disaster. So as you can see, I'm not trying to confuse everybody, but there's 3 programs. You can either apply for all 3, you can apply for 1, you can apply for 2, but what you cannot do is you cannot duplicate the loan proceeds. So if you get your $10,000 grant through the EIDL loan, the economic injury disaster loan, your P3 loan would be reduced by that $10,000. All applicants shall not be required to repay any amounts of advance provided, even if oh, I'm just going to forget it. Sorry. Denied a PPP loan. Sorry about that, you guys. I've talked a lot today, and I'm surprised I even have a voice left. The applicant receives in advance, the advance amount shall be reduced from the loan forgiveness amount. And then again, this is from our website. Let me just read this. Resettlement of economic injury made during the period beginning January 30 and ending on the date for which covered loans are made available are not precluded from receiving. Again, that's what they're telling you, is that, you know, if you've gotten an economic injury disaster loan, you can still apply for the P3 loan. Grant applications shall terminate on December 31st, 2020. We always have to have a sunset date for any of our disaster programs. I'm going to just go by this. Oh, this is a big thing. You want to talk to your tax consultant, but please know that businesses are eligible for an employee retention tax credit, and businesses and self-employed individuals can delay payroll tax payments. So that could be a huge tax benefit as well. Businesses that have net operating losses have some limitations relaxed. So if your business had an NOL on a tax year beginning 2018, 19, or 20, and that NOL can now be carried back 5 years instead. This may improve cash flow and liquidity for some businesses. Pass-through businesses and sole proprietors will also be able to take advantage of the relaxed NOL limitations. Again, you'll want to talk to your tax consultant on that. We have a lot of resources out there that can help you. I know this is hard to navigate through a lot of this information. Right here in Rapid City, we have the Small Business Development Center. For those of you that have a pen and a pencil, please write this down. Their number is 394-1706. They can help you fill out and navigate through some of this information. Up in Spearfish, our Women's Business Center, or the director, her name is Michelle Kane, K-A-N-E, and her number is 642-6311. Both of these centers will help you guys in filling out your applications, as well as anybody in our district office. I happen to be covering the western side of South Dakota. Our district office is in Sioux Falls. That number is 605-330-4243. We have a lot of other websites out there that you can go to, and primarily that's it. If you want to help me get to the questions, I'd appreciate that. I'm a little bit, I have a question. Can you make these slides available to us? I certainly could, but I'm a little bit hesitant to do that because, as you can see, some of the information has changed. And let me see if I can kind of correct that, and then I'll get that out to the audience. Okay, for clarification, you said the rehire period in order to be eligible is from February 15th to June 30th. I heard earlier today that it was February 15th to April 30th. You heard that too today? With Senator Thune? Senator Thune and Tom Johnson. Okay. So let me get back to you again. See, these are some of the questions that we really don't have the answers to, but I will get back. Are you able, Rachel, to post, if I would give you the answers to all the Q&As, are you able to post that then on there? Good. Okay. So if I don't know, I'll get back to you. I'm going to get back to you on that one. I don't want misinformation out there. Would any software fees be included for reimbursement if it's required for us to run our business? I believe yes. I mean, that's a vital part. Have you heard of loan deferments of 6-month principal and interest for existing SBA loans not associated with COVID? That is interesting. There are two, as you can see, this is coming in very fast and furious. I have heard both ways on that. I have heard where there is a 6-month deferment for principal and interest, and I've heard where there is a deferment for interest only. Again, I'll get back to you guys on that and let you know. Either way, go to your local lender and apply for deferment. Loan maturity is 2 years at date of origination or date of forgiveness. Some for deferment period, please and thank you. Okay, as it states right now, the 2 years would be as of the date of origination. Now remember, your origination date is out there, and then you have a 6-month deferment payment before you start making your payments. So you basically, any amount that's not qualified, you would have an 18-month time frame to pay that back. Okay, let me go back to that other one. I think there was another one part of that. Hold on. I want to make sure I got, some of these have multiple. Same as deferment period. Deferment period would be as of the date of origination. You would get 6 months. Okay, so I'm counting employees. Is it only full-time employees? Is it more FTEs? No, it is going to be, there right now is a calculation out there where it is, there are some businesses that's all they have are part-time employees. So there's 2 questions that are going to be asked. One, how many full-time employee equivalents do you have? And that is how you're going to go on. But my suggestion is that you would go off of your total payroll, not necessarily people count, but your total payroll cost is what you would take into your lender. I would have both things available. I would have your employees, like in an Excel spreadsheet, you know, your employees with their salaries, any benefits that they might receive from you for insurance, state, local taxes, anything like that. But then also put their I guess their full-time equivalency, their 3/4, put 3/4. If you only have somebody that's working 20 hours, put 1/4. On page 1 of the application, is the number of employees only full-time employees? No, it's all employees. Is the average monthly payroll only for full-time employees? No, it's for all employees. All employees that make under 100,000. Let me clarify that, okay? So for the idle advance 10K, can the money be applied to pay for inventory ordered but not sold due to business temp closure? The 75%, and I am going to hold you, the $10,000 grant is made, and the P3 is made to retain your employees, to make sure that you retain and pay for your payroll. I will get back to you on that, but I am just going to tell you that 75% of the P3 loan has to be used for payroll, okay? So the other 25% could be used for inventory ordered but not sold, if you have debt on that. If I own more than one business, can I apply for the emergency loan for each business? Yes, you just cannot duplicate. It would be based on your EIN number and how you file. So assuming that you file those 3 businesses with separate EIN numbers, you would do 3 separate loans on that. What if a business is receiving lower gross receipts, still eligible? I need help with that one. What if a business is receiving lower gross receipts due to COVID-19, you mean? Because this looks back to a year ago. So if you could get back to me on that, whoever answered that, asked me that, Laura, if you would kind of re-explain that, because we're going to take a look back on your tax return. Does this apply to nonprofits? Some nonprofits. talked with our bank and they've told me that religious organizations are not eligible to apply for the P3. What information do you have that they can look like they say that they are? As of right now, that is a big question, whether religious faith-based entities can apply. I can tell you, I did get the information last night on faith-based daycares, and they are eligible. Faith-based daycares are eligible. So for example, the United Methodist Church, they have a daycare. That daycare is eligible, but as of right now, the United Methodist Church is not eligible. I filled out a COVID-19 relief application through SBA.gov on Tuesday. I've not heard or received an email if my application was received or is being processed. How do I know if my application is being considered? Okay, so as I told you, a lot of things have changed even from 2 weeks ago. Our website was taken down. At one point in time, you had to go and physically download all of your documentation into the website. If you go on the website now, you'll notice that there's no required documentation at all. So if you did not get, when you submitted your loan application, if you did not get a pop-up that said, here's your application number, my suggestion is that you reapply. I do not believe that your information was received. What about floor plan interest for a dealership? Would that be an eligible expense under the P3? I don't know, I'll have to get back to you on that. The June 30th rehiring date for all employees is confusing. Please explain how that impacts debt forgiveness. It's not the June 30th rehiring date. Our goal is that you would rehire all employees immediately. The June 30th is the expiration date of the P3 loan application period. So you have until June 30th to actually apply for the P3 loan. That's the expiration date of the actual loan itself. Do you know whose loan documentation these loans will be written on? Thank you. As of right now, I'm going to tell you that SBA will be providing those, but again, we've not heard anything, and I am thinking I'm pretty 100% certain on that SBA will be getting that information out to all the lenders. Would website fees be reimbursable? You know, I know that a lot of people rely on that, and I think if you have proper documentation in your file that is intricate to your business, that it would be an eligible cost. If restaurants are not allowed to reopen for normal business beyond the 8-week period, will that mean that the total amount will not be forgiven? That is a wonderful question. Right now, we're doing it 8 weeks. I can tell you that if this goes on, more than likely, Congress will reconvene and extend out the term, but right now it's out there for an 8-week period of time, so don't quote me on that. I'm just giving you my opinion. Probably get in trouble for doing that, but that's my opinion. While we're waiting on loan processing and the cash to flow, can the employees claim unemployment without penalty? That will be a topic that they would have to bring up with the unemployment insurance division. I don't know how that works. What is the best route for assistance for seasonal businesses were to open now in May 2020 that cannot open due to COVID-19? Sees that most of the info is for current operation and business. You're right, it is. However, when you look back for seasonal businesses, let's say tourism, for example, let's say you have a shop up in Keystone, and typically your open date was May 1st. You really don't know what your losses are going to be yet because that's May 1st. However, you can historically look back on your taxes and you can say, okay, from May 1 till June 30th, this is typically the amount of income that we have received based on historical data from May 1st to June 30th. Would I apply now? No. This application, this loan program goes until June 30th. So I would wait till after May 1st to see if you will actually be impacted by COVID-19. You know, more than likely you're going to be, but use historical data then going back to that period of time. Hopefully that answers your question.
Looks like Laura explained more to her question.
Okay, let me go.
Let's go back to her original one quick. Sorry guys, bear with us 1 That was her original question.
What if the business is receiver? Okay, okay. What if the business is receiving? Okay, lower. Okay.
She responded. So.
Self-employed as an independent contractor, it's qualified. So go back to your Laura, go back to your historical data a year ago and use that then as the amount of, annualize that out and then use that as what your loss of income would be, assuming that you had the same amount of contracts this year, that you would have had the same amount of contracts this year as you did last year. So it's all about historical data, because a lot of you don't know how you were impacted because it was just such an abrupt shutdown. I just want to make sure that I have an LLC and I'm not on payroll. Can I apply? Yes. I didn't think I could, but just wanted to ask. Thanks. You're not on payroll, but yet you require that income to flow over into your everyday, to make your everyday payments and livelihood. To me, you should be able to take an average of what your gross proceeds would have been and claim for that amount. You mentioned earlier that under the EIDL, there are 2 applications, one for the 10K advance and one for the loan. I was only able to complete the 10K application, was told by SBA hotline that there is only one app and the loan amount is based off the gross receipts inputted in the 4-page application. That is true. That is true. I'm sorry, I should have said that earlier in the presentation, but they have streamlined this process. I mean, 2 weeks ago, we were doing things totally different, and now they've streamlined that. So what you will be contacted by, now I'm doubting myself on that. Oh, anonymous attendee did that. I'm going to get back to you guys on that. And all of a sudden, I'm kind of talking through that to myself, and I'm kind of doubting that because I thought I remembered when you go into the SBA webpage, you go into sba.gov/disaster. There's a goldenrod bar at the top of that is for, and it will say COVID-19. I'll try to see if I can pull it up. And hold on here. Let me get back to you on that. Instead of spending time on that, I'll get back to y'all on that. Back to that question though, you will be contacted by an SBA disaster specialist and you can have that conversation with them. The reason why I'm doubting that is that at one point in time, we did not have this 10,000 grant. So you only applied for the loan. Those people that applied for the loan got notification from SBA to go back in and apply for the $10,000 grant. And so I'm a little bit fuzzy on that myself, and it's just probably because I'm tired. So I'm sorry, I'll get back to you on that. How would self-employed sole proprietors and no employees report on a Schedule C figure the P3 loan amount gross receipts? And what would be eligible uses to make sure that the loan is forgivable? I would take it if you have that follow through income going into your tax return, you can show that based on historical data, and that should be eligible because sole proprietors are eligible for this loan program. If you didn't lay off employees, can you still request? Yes, the paycheck protection dollars. Yes, because good for you. Good for you. You kept your employees on. Yes. I did receive a pop-up confirmation number, my COVID-19 SBA loan application, so I need to wait to hear from you in my email now. Well, you won't hear from me. You'll actually hear from a disaster loan specialist. And I'm not understanding if it's the actual loan or if it's the advance. The advance should automatically happen. The loan application, you will hear from an actual loan specialist. If somebody's heard differently, please reach out to me because we have not heard any follow-up from the $10,000 grant yet. That just came out on Tuesday, late Monday night, Tuesday of this week. So I'm anxiously awaiting responses on that. To confirm for an EIDL loan, you do not need a personal guarantee for a loan under $200,000. Is that correct? You don't need a personal guarantee for any amount. Thank you. You're welcome. Can you get reimbursed for distributions? Lee, can you help me with that?
I think as an LLC, if he just uses money to pay staff, then he pays himself distributions.
Oh, okay. So then again, use historical average on that. And if you have follow through, I mean, if you have follow through that that's income for you, and you can show historically what that amount typically is, Lee, I would certainly try to claim that. Can you review again what the EIDL loan can be used for if the P3 is for payroll? Sure. So the economic injury disaster loan is a $2 million, up to $2 million. 3.75 is the interest rate for 30 years. The proceeds of that can be used for working capital, and it is what it cannot be used for is to replace lost profits. So you can go in and you can use it for, let's say that you have long-term debt out there. You can use it and pay the interest on that long-term debt. It can't be used for, I had somebody call me today and say, hey, I was looking at expanding my business. Can I use it for that? No, you can't. It is simply for disaster purposes, for cash flow purposes. The P3, to simplify it, is for payroll. So the EIDL loan is for working capital. The P3 is for payroll. And if this all isn't confusing, just kidding. Thanks everybody though for hanging in there. We apply for all three programs. What order should we do it in? I'm sorry, it's not funny. I was just say whatever loan you can get first. No, but I'm just kidding. You can do whatever one you want to. You know, I'd probably go through the disaster loan first because you can apply for two right during there, you know, the actual EIDL loan and the $10,000 advance. And then the P3 hasn't even been rolled out yet. So then go to your lender. So apply for the things that are available now, which is the EIDL loan and the EIDL loan advance. Yeah. As you can see, there's a lot of I don't know, but I will get back to you guys on all that as information rolls out to us. Do employees have to be laid off to qualify for this? No, no. And if they are laid off, once you get your loan, you need to immediately rehire them. I'm told the docs and portal are not ready yet. Is the program functional for tomorrow as advertised? I wish I knew, Sean. If you see me looking down a lot, I am actually live with my email, hoping that I would have gotten information while I was on this webinar with you. We are anxiously awaiting the information as well as you lenders are. Are they still expecting the banks to run the loan app through the CAB's website? We don't even know what portal they're going to use as of this time. And Lance will sure let you know once we find out. I know you're anxious, everybody's anxious, and we don't want to get it wrong when we get the information out to you. So as soon as we do, we'll do a blast email to all of the lenders. Hang on here, I just want to see if I've gotten anything. Hold on, I'm just reading through a quick email that I just got to see if there's anything that just changed. No, we're good there. Okay, can lenders contact you with questions? Yes. That's for Michelle. Hey, Michelle, thank you for being on. That's Michelle Kane. She's our director of our Women's Business Center up in Spearfish. What a rock star you are, Michelle. So I'm gonna give you my actual cell phone at 605-209-2739. Again, 605-209-2739. Please be patient. I am actually remotely working, and I try to get back to everybody, but sometimes you might get a call from me at 8:30 at night, and please forgive that, but I'm trying to get back to everybody as quickly as I can. I believe it was stated somewhere that the EIDL loan disbursement can be deferred. I believe it stated somewhere that the EIDL loan disbursement can be deferred. No, the payment can be deferred. Can the loan proceeds from the P3 be deferred as well as given the unknown date where social distancing will be lifted? No. So the loan proceeds will be dispersed once you sign your loan documents, because you have 8 weeks from origination to get that money spent. And how the lenders will, do your documents, whether or not they're going to be doing it one-on-one with only just one person, whether or not they have, I don't know. You're going to have to talk to your local lender on that, but I do appreciate the fact of social distancing. You're welcome, Lee. I kind of feel like I'm not that much help just because I say I don't know a lot, but I will try to get you answered as quickly as I can with the correct information. Are they, okay, that was back to that, okay. I think we're done unless anybody has anything else. I hope this was helpful. Again, I want to try to be as transparent as I can be and still give you correct information. I think for a lot of us, this is such an uncertain time. It's such a different program because if any of you lenders out there know the SBA way, this is so totally different than what you have been used to. We thank the lenders for their patience. We thank our partners. We thank Elevate Rapid City. Thank you, Rachel, again. Thank you. And Tom, I think you're in a room in the back. Thank you so much for hosting us. I appreciate it so much. If you want to hear it again, if you want another update, reach out to Elevate. I am at your service to get you guys information as quick as I can.